All right, y'all, back to work. Weekend is behind us, and boy, do we have a big first week of March ahead of us. And wow, these markets, they keep on getting knocked lower and lower every day. Now, in these bear markets, our job is to sell the bounces, right? Short the bounces back down again. Now, you probably noticed by now, though, it sounds very easy in theory to short the bounces, but how do you pick the right spot to hit that sell button and short that next bounce? In these situations, there's one pretty simple trick, some technique I like to use that tells me where I should hit that sell button, short that next bounce, and make money on Tuesday morning. So as always, in tonight's video, we'll cover my favorite entry techniques, my exit targets. I want to make sure everyone has a game plan, a roadmap to make some money tomorrow as well. So charts are ready. Enough of the intro. As always, thanks for joining me back here on the YouTube video. Now, let's roll our sleeves up, make some money on Tuesday morning. S&P SPY is all ready to go tonight. Nasdaq triple Qs are all ready. I have three very simple but very important clues on these charts that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on the hourly time frame. I like to use these hourly charts as an overall directional filter. It's very easy to see right now the bears have full control on the hourly. That tells us where the best odds of success are going to be. That's one of three clues for tomorrow. A bearish directional bias on the hourly chart. I have two more important clues though on some faster time frames, some tick charts. We're not going to trade entries on the time charts. We'll grab those tick charts in a moment. Before we do that though, let's check schedule for tomorrow. There's no major news on the calendar for tomorrow, but don't forget, tariffs for Canada, Mexico, and China, 25% trying to curb fentanyl trafficking, hits the tape tomorrow morning. That is a really big wild card for us tomorrow. We don't know how the markets will react to those tariffs tomorrow morning. It's definitely something that we're watching tomorrow morning in our trade room. So no major news for tomorrow, but again, 25% tariffs on Canada, Mexico, and China take effect tomorrow morning. How will the markets react? We'll cover that tomorrow morning in our trade room. Let's get back to our charts though, because the money is made on our charts. I mentioned earlier, one big clue here is this higher time frame, the hourly chart. We're very bearish here on the hourly, but two more big clues here now on the tick chart. Remember, tick charts are based on volume. If you're watching for the first time right now, all the time frames you'll see are in the upper left-hand corner. And that moving average right there, it's pretty much the only indicator we use to find winning trades each week, is the 21 EMA. There are two really big clues on this tick chart. One big clue is that huge move down we saw this afternoon as Trump went back on social media and reminded everybody those tariffs are going to take effect tomorrow morning. Now, anytime I see a big move down, a bear market, I don't want to sell low. I want to sell a two-legged pullback and a retest of that low. Once I get that retest of that low, I can then look for a reversal off that low. So one big clue in the tick charts is a big move lower, expect a two-legged pullback and a retest of that low. A second big clue is on the tick charts as well, and that of course is a trading range. Now, why is a range important? Well, if you watch these videos, you know that anytime we see a range breakout, a breakout pullback is a very likely area of key resistance and is one of the most important clues here as far as picking the area to short that next bounce. So we know right now the bears have control on the hourly chart. We know we have a big move down. We don't want to sell low. I want to sell high for a retest of that low. And we know we have a bear range, a breakout, which means a breakout pullback. Put all those clues together, and there's some very easy ways to anticipate where we can short that bounce and make money tomorrow. For example, I would love to run up into that breakout pullback zone. And you know me, right? I'm not going to pick a top up here. I'm not going to blindly sell this area. What I'll do is look for a bull trap. Right when this thing starts to feel like a reversal, we talk about this a lot in our trade room. Right when a bear market feels like a reversal is usually when it's time for a bull trap. Now, when I say bull trap, think about the price pulling back here. Buyers trying once, buyers trying twice. Once I have those buyers trying twice now I know where their stops are. And think about this: if you're caught long and you get stopped out of a long trade, you're going to sell your way out of that long position. That will fuel that move going back down to retest that low. Now the market wants to go back and retest that low right now. This is where a winning trade becomes a big winning trade. As we're going lower, this is we start looking for, we call add-on trades in our trade room. It's gonna be a shallow pullback that will barely miss that moving average. Very important. When it separates off that 21 EMA like that, again, that pullback will barely miss that 21 EMA. What that tells us is if I can get a lower low in price, I can now look for an add-on short right above that high. So think about this now, right? Big move down, sell the bounce. Where do we sell the bounce at? Probably the underbelly of that trading range. Don't just blindly sell it. Look for a bull trap. Buyers once, buyers twice, and sell into their stops to fuel that move going lower. Then, want to make more money? Add to your winners. Get that separation off the moving average, that lower low in price, right above that high. Nice strong red candle back below 21 EMA, and that will be your add-on or your re-entry, right? If you miss the entry off that bull trap. Now, here's where the fun really happens, because now, as we go back to take out that low, anybody who sells on that bounce, where's their profit target? It's probably back around that low. This is a great place to buy a bear trap. Now, it's a bear market right now. I'm going to be a little more cautious on buying a bear trap. In these situations, there's one entry pair I look for to buy down here. It's called a crown reversal. What's a crown reversal? Crown reversal, very simple. I'm going to trap the bears in once, go higher, twice. Now, very important. I want to get in right below that low in between. Strong green candle, closing back above the 21 EMA, and I'm in on that crown reversal. Target number one, back at the high of the add-on trade. Target number two, back to the high of that bull trap going short. Now, here's one important question. What if we don't get that bull trap up there? Because a lot of times what happens is we'll get that nice deep pullback, but there's so many bears up here, it gets whacked and runs back down again. We may not get the chance to trap those buyers in twice and sell into their stop losses. If we see something like this where it runs up and gets whacked back down again, it almost always begins to grind going lower. Watch closely here. I'll mark a trend line off those lows. I'll bring that trend line up around these highs. That creates a bear channel. Now here's where the magic happens. I'm going to mark those highs, right? That prior high, these prior highs. I'm going to look for that first test off the high of this channel. So again, I would love to go up, trap the bulls in, and run back down again. But if I don't, if I see a V-top on this and it gets whacked back down, watch that grinding motion going lower, find that new bear channel, and whatever you do, don't miss that first test is the best test off that high. And remember, as it makes its way going lower here, keep your eyes open for those lower lows in price and that run back up again, right? The above for an add-on trade, right? It's a bull trap off the high of that channel and an add-on going lower. We take out that low, we trap those bears in, crown reversal, and we squeeze this sucker back up to retest these highs. That is one key scenario I'm waiting for tomorrow. Now I have a couple more variations of this I want to share with you. Before we do that though, let's slow down for a second, because I know that most guys and gals, most folks watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy. What the heck are bull traps? What are add-on trades? Don't you worry. I teach this entire roadmap. In fact, I have a ton of examples: bull traps, crown reversals, add-on trades. Guys, I want to help you time better entries with this and make a lot more money. What I'll do is I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free trading course because everyone loves the trade examples I include in that short video series. The best part is it is 100% free for you. Also, too, guys, keep in mind too, I'm going to put all the important links you'll need to learn the entire system, time better entries. I'll put those links for the description of the YouTube video. Start first on the free video classes. Most folks start making money on their own, all with the information I share in that free video course. So start there first. And if you're on Twitter or X, I post a ton of charts and videos and updates in between these YouTube videos. If you're on Twitter X, give me a follow. Again, all the details you'll need to follow along, learn the system, hopefully make a lot more money because of it. I'll link that for the description of the YouTube video. So where did we leave off here right now? Yes, big move down, running up, bull trap, back to retest that low and squeezing off of that low. I want to talk about one key variation. What if we go sideways, right? What if we get stuck in a range here? We got tariffs coming in play for tomorrow. We might get stuck in a range on this. We saw a beautiful range last Friday as well. Now, ranges are one of the easiest ways to make money if you know how to trade them. We're going to cover that here in a moment. Before I do that though, let's talk about one more variation as we look to short the bounces. I mentioned earlier that I'd like to go up into the underbelly of that range, trap those buyers in and run back down again. You know, here's what happens sometimes though. Sometimes we get that beautiful bull trap up there, but for whatever reason, we can't make it all the way back to retest the low. We sometimes will get another leg going higher. Now that second leg going higher, that creates a double top in an overall bear market. Promise me, this is not a reversal. It would have to really keep going for quite a while longer at this point to call this a bullish reversal. Think about that hourly chart we saw earlier on the 60-minute time frame. So what happens a lot of times is we'll get that nice 2-legged pullback. We'll get that breakout pullback. We'll get a profitable trade on that, again, shorting that bounce. But we're not going to get it to roll all the way down again, and it gives us one more leg going higher. Okay, remember, this is a double top. It's not a reversal. So as we go back higher again, anybody who buys that pullback right there, they're taking a big chunk of their profit off at the retest of that high. This is a horrible spot to be buying. Again, right when it starts feeling like a bullish reversal in a bear market like this, it's probably time for a bull trap up here. And when I say bull trap, it's 1 try, it's 2 try. Again, lower low. Why lower low? Because buyers want to buy low. The lower they go, the more I rope them in, the more their stops are right there to fuel that move. So a double top, we call these retest trades in our trade room. We run up, we retest the high, and we sell it back down again. And when I say sell it back down again, it's always going to be that bull trap off resistance. And then as it runs lower, remember that separation off that 21 EMA. And when I say separation, it's that pullback, like over here, right? Where it barely pulls back and misses the moving average. That's a separation I'm talking about, right? So get the separation, find that lower low in price, right above that high, and finish that sucker off back to retest the low. Once they retest the low, it's that crown reversal bear trap I mentioned earlier on in this video. So now you know some variations of how we short the bounces, double top variations, V-top variations we use in our trade room. Like I said earlier though, what if we go sideways down here? This would be a very wise technique for us to learn before tomorrow, because with tariff talk, we could easily go sideways here into Tuesday. Let's go grab the Nasdaq right now. Nasdaq's getting lonely over here. Over on the NQ, I'm over here for you, buddy, here now. On the Nasdaq, you can easily see right now we're bearish, right? We're bearish right now on the hourly, and we're going to use that as our guide for overall directional filter. filter. Now, before we dive into the tick charts here on the Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing to our channel, because YouTube rewards me, believe it or not, every time you like, share these videos, and subscribe to our channel. I know we're all busy people these days. I appreciate you spending a few minutes of every evening here on these videos. So thank you so much for all the likes, the shares, subscribes, all the ongoing support. Now, let's roll our sleeves up and dive into those tick charts here on the Nasdaq. We know we're bearish here on the hourly. Look at that big move down we saw here on the Nasdaq. Why is a big move down important? Because a big move says, I don't want to sell low. Usually, a big move means a two-legged pullback. Think about a measured move, a two-legged pullback, and a retest of that low. Once I get a chance to short that bounce, I then like to look for a profit target off at that low and use that crown reversal pattern back up again, right? Two-legged pullback, short the bounce, back to retest the low, rinse, and repeat. The same basic game plan we talked about earlier on the S&P can be used for that. We go up, we don't pick a top, right? We trap the bulls in once, twice. On the way back down, we look for that add-on trade, right? Once we get back to that low now, we take our profit, we wait for rookie sellers to come in and chase after it. And usually what happens to this is we see those bears come in, they try once, higher high. Remember, always a higher high because sellers want to sell high. You'll learn that we call entry counting technique in our free video classes. Get right below that low, strong green candle. And again, in these cases, target 1 is back up to that add-on. Target 2 is back up to retest the high. And usually this makes one big range going sideways. I covered some variations of a V-top and a double top on this, but that's basically the idea here to sell those bounces. Now, let's talk ranges. We could easily go sideways in a range tomorrow. I have one range right here. Now, this may not be the range we see tomorrow. This may wind up ranging somewhere between these two ranges right here. We may end up seeing this range right here. So be aware of that. A new range may be forming at some point here overnight. Let's use this range for now, though. I want to show you how we trade ranges in a bear market. Now, first of all, ranges love to rotate. So the amount above the range, I can project now below the range. Ranges, they love to rotate back and forth using a technique we call the pendulum swing. The amount above, the amount below, the amount below, and the amount above. So if we understand that technique, if we understand that ranges like to rotate, I want to sell high and buy low. And the overall direction on the hourly chart will tell us the technique we'll use to buy low and sell high. You know, for example, if we were to rotate back and forth right now, I could use, again, the pendulum swing, the amount below the range, project that above the range, and that will give me an area of resistance. This is where I now want to look for a short, sell the bounces, and go back down into that range, roughly about the amount we went back above it. But again, how do I pick that top on this? How do I know when and where to sell it? Well, again, the pendulum swing will tell us where. My favorite technique to short these bounces, again, is to not pick a top on this. Wait for the pullback. Let these buyers try twice. Once they try twice, now I know where their stops are. And then as this thing runs lower here, that's exactly where I can use that same add-on, right? That bull trap off the high, that lower low in price, and that add-on, right? That add-on going lower. Makes sense, right? It's a bull trap and an add-on as it rotates off of that high. Now the game plan's pretty simple. We now know targets come off at that low of day. We measure the amount above. We measure the amount below. That tells where our second profit target comes off at that low. Now, as we go lower here right now, because we're overall bearish, this is more likely to keep going here, right? More likely in this scenario to keep on going below the low of this trading range. I have to be a little more patient on the entry, a little more cautious on the entry here. This is where that crown reversal pattern comes in handy. So as we take out that pendulum swing, I then look for a crown reversal. It's very similar. It's bears once, higher high, bears twice. But now, again, because we're so bearish, I want to get in as low as I possibly can. This is basically a bear trap pattern. We call these crown reversals in our trade room. Notice what I'm doing here. I'm buying underneath that swing when I'm going against the overall trend. When I go with the trend, I can simply wait for it to pop up 1, 2, and sell below that low. A bit more aggressive when I'm going with the overall trend on the hourly time frame. When I say overall trend, I mean hourly chart. When I'm going against the direction on the hourly, I want to get in underneath those prior swings because, again, I got to be a little more cautious. Now, as we start going higher here, where's the market want to go? You guessed it. It wants to go back and rotate higher. What I'll do now is keep on adding to my winners. And one easy way to do that is again, separation off the moving average, higher high in price, get below that low, that nice strong green candle closing back above that 21 EMA, and you're in on that rotation. The amount below, the amount above, right? Take that profit, trap those bulls in, and trade that rotation back down again. In my trade room, we always say, right, it's traps around the edges and add-ons as it rotates. Traps around the edges and add-ons as it rotates. The hardest part about these is that if we go sideways here, and we wind up rotating off that low, the hardest part is this will feel very bullish. But again, once you know how ranges work, the amount below, the amount above, you will not fall for that bull trap. Remember, right in these bear markets, right when it feels like it's time to be bullish, right when it feels like a reversal, it's usually not. It's usually simply nothing more than a bull trap. So trap the buyers in, squeeze those stops, and run back down. Be careful, right? Be careful with that fake out breakout off of that low. It'll feel very bullish as we go. And keep in mind too, if we go into a trading range, if we see this thing really break down, if it really breaks through that pendulum swing, once we break through the pendulum swing, now we know this is a range breakout. What do we do with a range breakout? We look for that two-legged pullback, the underbelly of that range. Same idea, right? Trap those bulls in, use that bull trap, add more to your winners. Same thing over again. We retest that low, and then what do? We bear trap, right? Once everybody starts taking their profit at that low, this is a horrible spot to be selling. So trap those bears in, 1 and 2, get below that low, and squeeze those stops for a crown reversal. Target 1 at the add-on high. Target 2 up at the deepest part of the pullback high. That's the game plan for tomorrow. Now remember, tomorrow morning, tariff talk will definitely be something on our radar. So tomorrow, be there with us in the morning trade room. We'll react to how things develop as you know more about the tariffs right hitting tomorrow morning at the opening bell. Speaking of tomorrow morning, the place to be is in my trade room. Every morning, 8 o'clock Eastern time, guys, the easiest way start making money in these markets is to learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to learn the entire roadmap. I'll put everything you need in the description of the YouTube video. Start first with the free video classes, enjoy all those trade examples, then come join me in my trade room and we'll do it together. In the meantime, guys, be well out there, be nice to each other, make some money tomorrow for us, and be here next time. Adios, amigos. Bye for now.